Hey there, it's Chris Reid from Pensacola, Florida, realtor here in Pensacola. I am finding a real need lately to take a real deep dive into the real estate market here in Pensacola. You know, it's easy to get just a, distorted view of what a market is doing with a short snapshot or what one hears in the news, depending on what channel you listen to. And I thought it would best serve my clients, people that I work with, to really take a deep dive into the market here in Pensacola, where we've been, where we are, where I think it's going. And let's start with talking about how real estate is truly a long-term investment. You know, we've gotten in the past, 10 years or so, a lot of people have made a lot of money, have built a lot of equity in their properties. But traditionally, real estate is a long-term investment. It really needs to be looked at like that, like one would look at their mutual funds or 401ks. When growing up, my parents had a 30-year mortgage, and they were in the house that I grew up in for 30 years, and it wasn't uncommon for people to, get a 30-year mortgage and live in that home for a long period of time. These days, people stay in their homes for more like, 6 or 7 years. Some people stay in longer. Sometimes time can get away from you, and you're in a property longer than you expect to be. I know that happened to my husband and myself. But really, I've been tracking the Pensacola market here for over 20 years. And I started paying attention to it before we moved here 19 years ago. And because we were investing in real estate here. And so I kept track, before I became a realtor here in Pensacola, kept track of what the market was doing, really kept a close finger on the pulse of where prices were, how quickly things were selling, amount of inventory, the kinds of properties that people were interested in. Meaning at 20 years ago, people really started to get into the older homes, the historic properties. People had gained some wealth, and I kind of think of it as, when people have a little bit more money in the pocket, they're a little less concerned about risk. They're a little bit more about risk reward. And about 20 years ago, people were looking, they were buying older homes, they were fixing them up. Older homes like our 1920s Craftsman style home that you find in so many cities across the country are found here in our Pensacola, East Hill, downtown areas as well. And people were gravitating towards them. I know I was myself. I had lived in older homes, and 1920s Craftsmen still today offer a lot of appeal. But 20 years ago, people were really, buying them up, fixing them up. Home Depot, Lowe's, all the big box stores were catering to the people who were doing their own home improvements. And prices were considerably lower at that time. Our East Hill market was really starting to get discovered because of the non-cookie cutter, more historic appeal about it. What happens traditionally in a town like Pensacola, or an older town, is that at some point through history, as a town develops, money leaves the center of town, moves to the suburbs. People build larger homes on larger lots, and a town will develop or grow like a concentric circle. So you have the center of downtown, and then outside of downtown you have a subdivision or like an area outside. Okay, in this case in Pensacola we have East Hill, North Hill, the Tanyard area of downtown, Old East Hill, that were all developed in, right after the turn of the 20th century into the 1920s. Then you get past that circle. The next circle is, the homes that were built in the 1950s. We had another wave of growth and development right after World War II. Brick style ranch, right? Mid-century modern homes. And then we have another era that's like 1980s, okay? Another concentric circle outside of town. 1980s homes. We get up to the northeast section of Pensacola. And some more two-story homes built in the 80s. Then we have another kind of like a boom that happened right around 2000 to 2005, where we had, homes 2,000 square feet, maybe 3,000 square feet, a real Florida style home, brick, maybe columns, big, nice grand entry, open concept became really popular. Vaulted ceilings. And so all of this money kind of went outside of town. Well, right around 2005, 2007, money started coming back into the center of Pensacola. Started coming back into town. When our downtown was sleepy, we'll say, there were some restaurants and businesses that had stood the test of time and had been there for a very long time, but the downtown was very quiet, very sleepy, and the infrastructure, general infrastructure, the appeal, the aesthetic of the architecture was all there. The parks, the Main Street, our Palafox, was all there, kind of ripe. So what I had seen happen in northern New England towns where I'm from was where, the money would leave the center of town over generations, and then at some point the money comes back into town as people are looking for the restaurant scene, entertainment, the arts, and a new appreciation is given to downtown culture and appreciation for the older architectural design. So we experienced that right about right at the time when I was looking at moving to Pensacola, and I've been tracking the market ever since. Right around 2004, September 2004, we had Hurricane Ivan hit, and it was a really big storm that really impacted our area here. And a lot of the local people will refer to before Ivan, after Ivan. It was a real, almost like we look at, before COVID, after COVID, same sort of thing. Anyway, Hurricane Ivan was a real marker in time in Pensacola. And it just so happened that at the same time nationally, our real estate market was really booming. Okay, prices were on the rise. Here in Pensacola, because of Hurricane Ivan, there was a real housing shortage. Nationally, there was a housing shortage. Two things coincided. the rest of the state, the rest of the country was booming. Southern Florida was on fire, just cranking down in Miami, South Florida. And prices were on the rise. And then we started to peak out in about 2005, 2006, hit a peak, and then generally declined into, we had a declining market following the rest of the nation due to the banking industry, and we won't get into all the specifics of that, but we had our housing crisis, okay? Back in 2007, when I bought my East Hill home, you could get into a beautiful little East Hill Craftsman on a nice size lot for, $200,000, $225,000. You get into a beautiful little home. Average sale price in East Hill was about $300,000. You could really get in. And then waterfront, you could get into waterfront properties for $600,000-$700,000. So we have the housing crisis, okay, which happens nationally. Worst housing market in history. Bottoms out in 2008, 2009. Prices hit their lowest in many years. And we have the need to have low interest rates to encourage people to buy homes. It was used as a motivator to try to get people to buy homes, to get the economy going, and to pull it out of the ditch that it was in. At that time, we had hundreds of banks that were shuttering doors, many big institutions that had gone bankrupt. We had a lot of government funding and putting of money into the economy to try to help prop it up. But the real estate market is such a huge industry. It makes up such a massive part of our economy. It is imperative that it got up and running and got kicked into gear so we could the economy could get back on its feet. So we had the dump of the real estate market, the ditch, so to speak. 2008, 2009, 2010, it lingered for the longest time. People got really used to those low interest rates. I mean, getting down into the 3s, VAs getting into the 2% interest rate. Just unheard of, historic low interest rates. So over time, market picks back up. People start building confidence in the market. And we were on a very slow, steady incline for many years. Prices started to inch their way back up from about 2012, 2013, 2014. Slowly, steadily, prices started to rise. And this was happening throughout the nation. We could take a snapshot of the statistics, the graphs here in our area, and the trends, the markers would follow suit for the rest of the nation, of course, just larger numbers. Same trends. Local market, panhandle of Florida, state of Florida, southeast, and our nation. You watch the same trend lines, just increase the numbers. So we have this market that increased over time. Okay, that's what we like to see usually. Typically, real estate, as a long-term investment, does increase over time. And it is one of those things that you can kind of bank on. Look back at what your parents had bought a house for, or maybe your grandparents had bought a house for decades ago, and you see the amazing equity and growth that is built over time. Okay? So here we have the 2020 getting into, well, actually we had in 2014, I think it was 2014, we had the we had a BP oil spill. Excuse me if I got that date wrong. Which, again, kind of took a little bit of wind out of our sails here in Pensacola. But still so many opportunities to be had. I remember, I'm going to tell you a side story. I was at the office one day, the BP oil spill had hit. I have a background in photography. I took some of the first pictures of the oil hitting Florida, and had them published in the St. Petersburg Times out of Tampa, St. Pete. And I was at the office one day just doing my thing, and a call came into the office, and the office manager answers the call, and the person on the other end is from Atlanta, and they say, "You guys have oil on your beaches down there?" And she says, "Yes, sir. I'd like to talk to a realtor." She puts him on hold. There's like 4 or 5 realtors in the office, including myself. And she says, Get Chris. They pull me in. Chris will know what to do with this. Chris will know what to do. It's a funny story. Anyway, I take the call. I'm surrounded by my contemporaries. And the fella says, "You have oil on your beaches down there?" I said, "Yes, sir, we sure do. It's rolling in as we speak." He says, "Well, I'd like to come down and make an appointment to look at condos." I said, "We can do it. Let's do it. When do you want to come down?" Anyway, made a plan. He came down, ended up getting a killer deal at a Portofino unit. Actually, I think they're probably still mad at me for what this guy bought a Portofino unit for back in the day. But anyway, this fella saw the opportunity. He knew that this too shall pass, which it did, and he ended up enjoying a really nice beach condo for quite a few years, and sold it at a really nice profit. Anyway, market on its incline. 2016, 2017, things start to really pick up, starting to get in good stride. People are kind of starting to focus on a little bit newer homes, or homes that have been renovated, larger homes, getting into upsizing, younger, families, kids starting to get into bigger homes. But man, those, prices were high. Market was on a steady incline. It didn't look like it would ever end, although anybody who had been around for 2004 and 2005 knows what goes up must come down at some point. Anyway, market peaked out in 2020, 2021, just like it did everywhere else in our country, and had COVID, and we weren't sure what was going to happen with the real estate market with COVID. Well, it turned out that it created another big boom in real estate. People ended up buying houses outside of town, or with more room, or houses that were bigger for their family, or maybe they were able to work remotely. They were able to buy houses wherever they wanted to live. Anyway, again, something that nobody could have predicted, and it turned out to be another boom in real estate. So the market peaks out in 2020, 2021. And at that time, it was so darn hard for home buyers. It was so hard. It was so common to have multiple offer situations, people getting outbid left and right. I remember having certain listings that 12 offers within the first few days or week, working up Excel spreadsheets, comparing each offer side by side for the seller to try to help weed through. Eventually having to cut off the number of offers because it was just too much. Escalation clauses. Buyers using escalation clauses to outbid other offers. Buyers foregoing inspections, foregoing appraisal contingencies, anything that they could do to get that winning bid. Cash was king. If you were competing against a cash buyer who was going at or above asking price and foregoing, buying as is, foregoing all inspections and appraisal and whatnot, super hard to compete with. So people gained a lot of equity in their properties. Many people sold at the peak of the market. People who bought then, people always need houses. They still need houses, no matter what the market's doing. Knew that they were going to get into something, and then the idea being that they would hold, buy and hold, hang on to a property for the long term, know that it was going to be a long-term investment, and hang on to it, knowing that when, if the market was going to continue, then great. If it took a dip, then as long as you can hang on to it, know that you've got steady income, you're going to be okay. Or that you have enough down payment in, where you have enough equity in the property, so if you did need to get out, you still, don't have to worry about paying off your mortgage. Anyway, so here we go. Getting closer in time. We've got 2020, 2021, market peaks out, and we have a correction of about 6% in our area. So prices came down about 6%. 2022, interest rates are hovering, 6-7%, even a little higher depending on your credit worthiness. And let's look back in time. There was a time where double-digit interest rates were the norm. When I bought my first house, the interest rate was 8.75, and my husband and I were tickled pink to get into it. We were so thrilled that it wasn't double digits. Thrilled. We bought our second house. The interest rate was 7.75. We couldn't believe it. We were doing backflips. So interest rates bumped up, and market started to slow. Prices came down a little bit. Inventory came up a little bit. Market flattened and became more neutral. Our market here in Pensacola has been the flattest, most neutral market for the last 3 years than I have ever seen tracking this market for the last 20 plus years. I had been following real estate much longer before that, since, let's see, we'll just say the 90s. So here we have this market. Right now, we're in a historic market where it has been so level, so stable, so flat. We're not in a declining market. We're not in an inclining market. Our inventory has been in the neutral zone, neither a buyer's or a seller's market. for the last 3 years. Sure, we trend a little bit this way, trend a little bit that way, but generally speaking, the market's been level. Interest rates right now are at a 3-year low, hovering just over 6% for conventional fixed rate with good credit. Occasionally, they've been dipping below 6%, but really holding just above 6. And we're at pretty much a 3-year low. It was, I think, actually hitting that a week and a half ago. So here we have interest rates that have been pretty consistent for quite a few years now. We have inventory that's been pretty consistent for the last 3 years now. And we have prices that have been pretty consistent for the last 3 years now. Our average sale price in our East Hill market is now between $600,000 and $700,000. There are properties that have sold for $700,000, $900,000 on Bayou Tahar that have gotten torn down and multi-million-dollar houses built. It used to be that to get on the water, or actually, let me back up, to sell a house that was not on the water in Pensacola, that if you had a big Mac Daddy house, 4,000 square feet, beautiful home on a nice lot in East Hill, that if you wanted to try to sell it for like $800,000, you were competing with waterfront. We now have houses in our East Hill downtown area that are selling for $2.4 million that are not on the water. New construction, East Hill. Some of them might have some water views. But generally speaking, this is the market that is now being created here in Pensacola. So what's happening? What does the future hold for our area? People, home buyers are worried. They're still having some of them are still having a hard time because, here you now have prices that are twice as high as they were, 10 years ago. And interest rates are hovering around 6. Honestly, I think interest rates are probably about where they should be. Maybe, I'd like to probably see them down in the 5s, but they're really not far off from where they should be as a norm. If they get down into the 3%, 4%, I think we have to be worried about where the economy is. The only reason interest rates go that low is when there's a financial crisis that the feds are trying to encourage people to buy homes to keep the economy afloat. So if we get down into the 3s and the 4s, I'd start worrying. It's all perspective. They're where they are because our economy it can handle it. And historically speaking, they're very good rates. So, that doesn't go without saying that, the hard part for, some home buyers now is that, okay, we've got these interest rates. They've been, at a 3-year low now, holding steady, no real sign of them changing. I mean, maybe if we get a new Fed chair, maybe they'll go down a little bit. Probably not a whole heck of a lot, but who knows? Nobody has a crystal ball on that. We just know what we're working with right now. 3-year low on interest rates. And we've got prices that have been stable for 3 years. Average sale price in Pensacola is $380,000. National average sale price is $420,000. So we're below the national average. I'm working with people coming in from out of town, out of state, from all over the country on a daily basis. Our Escambia County is the fastest growing county in the state of Florida right now. My husband and I just got back from Apalachicola. We were celebrating our 34th wedding anniversary. And we like to go over to Appalachia. We've been tracking that market as well for the last 25 years. And we like to take the coastal route when we go over there, so we can see, what the growth is, what's going on, and the panhandle of Florida is still very much in growth mode. Destin is still very busy. It's kind of grown out. Not really a lot of room for expansion. But when you head this way from Pensacola heading towards Destin, let's just say, the area between Navarre and Pensacola, that area is booming. That was an area that was very, very wooded, and they call it Midway. It's kind of like midway between Pensacola and Navarre, but kind of in the middle of nowhere. Well, that's all growing in, filling in. D.R. Horton townhomes in new construction going up all over the place. Largest national builder. I think they have a pretty good finger on the pulse of what's going on, and that should be telling. They're investing in our area. Navarre is growing. Navarre, when I first learned about Navarre and started visiting Navarre, that was in the 90s. And there were some 1980s homes up on piers. There was an old hotel. There were no condos, really no condos, maybe a couple, but nothing of great significance. They had a tiki bar out there with the sand floor. Juana's still there, but now all new and improved. No sand floor. And no high rises. I could have bought the Navarre Pier in the old motel for $150,000 back in the day. I kid you not. The guy who owned the pier, he was an old curmudgeon. He would see Rob and me, go out with our fishing rods to fish off the pier back in the day. And he recognized us year after year. And he would say, "You have to buy this place. I can't take it anymore." As he's sitting with a window, so you go out on this little wooden pier, and then there was this little shack that he had that you could buy a little bit of tackle. You could pay for your pass to get out onto the pier for the day to fish. And he'd have a little bit of tackle, and behind him was this window that he kept open, and you just saw this amazing coastline of Navarre, the most pristine white sand beaches that just went on as far as the eye could see. Anyway, I'll never forget the image of him standing there. "You have to buy this place. I can't take it anymore. I can't stand this anymore." And I've just looked at him against this backdrop of this scene that was otherworldly. Anyway, could have bought the place for $150,000. Woulda, shoulda, coulda. That was a lot of money for a poor college kid. But what sits there now are the Summer Wind condos. 3 huge high rises. Brand new beach pier with restaurant. Anyway, woulda, shoulda, coulda. So where was I? Navarre Beach. Navarre Beach, everything you see on Navarre Beach was built since like 2000. I mean, it's a brand new town. There's nothing really. I mean, it was a small beach community. Anything you see there now it's a new town, new Florida town, all since about around 2000. You go past Navarre, you get over to military base at Hurlburt Field, over into Fort Walton, And then you get into Destin, it's all pretty well built out over that way. You get past Destin over to Sandestin, and then you get into Grayton Beach and 30A, which is very, very well known. A lot of people from Atlanta have, second homes down in that area. But what they're trying to do over, people would get mad at me for saying this, but the planned communities that we have over Seaside, Watercolor, Alley's Beach, Rosemary Beach, all of those areas, they're all planned communities. There's a movie called The Truman Show. I don't know if it was with, what's his name? Jim Carrey, the comedian. The Truman Show was filmed in Seaside. It's just like a little Peyton Place, little perfect, everything's perfect. Little community. Anyway, they, in my opinion, they're trying to emulate what we have naturally here in Pensacola with our historic downtown. You get over past 30A, you get into Panama City. It was really badly hit by Hurricane Michael, with Mexico Beach as well. Mexico Beach looks amazing. Amazing how it got rebuilt after Hurricane Michael. Get into Port St. Joe, and another great old community, and over to Apalachicola. Anyway, we keep our finger on the pulse of what's going on over there, and we are coming back to Pensacola, you really just feel how much growth and development is going on here. So anyway, buyers today, younger buyers, maybe that haven't seen as much of the real estate world over long periods of time. It may be hard to accept the fact that, this is where prices are. They've been stable. This is where interest rates are. But the market has been very steady, level, and I'll tell you, I would much rather have this market than the market that we had in 2020 or 2021. That was chaos. It was so hard on home buyers, so competitive. We are now in the market that buyers wished we had in 2020, 2021. And the prices have come down since then. Inventory has increased since then. Buyers are getting closing cost concessions. There's some negotiation going on. Average difference between asking and selling price in our area now is 3%. So when something is priced fairly, it should sell, within 80 days and within at least 3% of asking price. So buyers have more room. Anyway, I hope this kind of helps give some perspective of where we are in our market here in Pensacola. I spoke for a lot longer than I was ever intending to. But anyway, I appreciate your sticking with me if you're still here. And if you have any questions about the real estate market here in Pensacola, the future of real estate here, development happening, it is an amazing place to invest. We've got the Hard Rock Cafe coming in. We have beautification of our Main Street downtown. So much good stuff coming in, and new people coming in, new developments, great place to invest and call home. Anyway, Chris Reid Realtor signing out. That was a long, deep dive into the Pensacola real estate market. I hope it was beneficial to you. Feel free to give me a jingle anytime. Would love to talk with you and be of service. Take care.